welcome. You're watching Market Cafe with me, Ankita Saxena, and with me is Snehisha. It is a fresh day of trades. But first up, we look at how the global markets moved and the trade setup for the Indian markets. Now, Snehi, yesterday, something very ironic happened. The treasury yields was inching up. It is well above the 4% mark, but it had a different impact on NASDAQ. It moved like 200 points. Because usually it has an inverse relationship with the tech stocks, but we did see NASDAQ inch up 200 points.
Absolutely, Ankita, you're just spot on over there. So good morning to you and good morning to all our viewers as well. Let me explain to you why this happened. But first, let's look at what the US markets did in general yesterday. And US stock futures were flat Monday night as the NASDAQ Composite and the S&P 500 snapped a 4-day negative streak in what has been a losing month for all the major averages. The NASDAQ Composite now posted its biggest advance of the month during Monday's main trading session, rising 1.6%. The S&P 500 added close to 0.7%. Meanwhile, the Dow was the only index that saw a nominal cut coming in of a downtick of 0.1%. Now, notably, the broad market index and the tech-heavy NASDAQ were able to post gains even as the yield on the 10-year Treasury reached its highest level since November 2007, gaining about 9 basis points to trade at that 4.34% mark. Now, what's surprising is that tech shares have historically struggled in a high-rate environment, so this makes the tandem rise with yields on Monday even more striking on Wall Street. Now, on the earnings front, you've got consumer retail giants Lowe's and Macy's. They're set to report quarterly earnings on Tuesday before the bell. Investors are also keeping a close eye on Nvidia's earnings due Wednesday. On the economic data front, Wall Street will be looking forward to Philadelphia Fed's non-manufacturing survey as well as the Richmond Fed's manufacturing survey results. Existing home sales data for July is also scheduled for release on Tuesday morning, and traders are also anticipating Fed Chairman Jerome Powell's remarks at the Jackson Hole on Friday for more insight on the central bank's inflation outlook. So this was largely the handover coming in from the US markets, largely positive. Dow Jones just seeing a nominal cut. Let's shift focus to Europe then, and European stock markets closed marginally higher on Monday after slipping to a 6-week low at the end of last week. The Pan-European Stock 600 index ended 0.1% higher, with sectors and major bourses pointing in the opposite directions. Auto stocks led gains up 1.1%. Construction and material stocks dipped 0.6%. Now, our focus is on Germany because Germany's central bank said the country's inflation rate is likely to stay above that 2% mark for just a little longer. So this is the handover coming in from US as well as Europe. Largely positive on US, mix coming in from Europe, Ankita.
That's correct, Snail. Mixed handover coming in there. Even GIFT Nifty is just 5 points up. Absolutely flat, actually. Pretty directionless, hinting towards a rather tempered start for the Indian markets. But for the Brent crude and US crude oil settled lower now as hopes for Chinese demand is fading. Right now, it is a battle between the Saudi production cuts versus the demand destruction. Now, we did see the gains in crude prices through the summer driven by the tight balance between crude oil supply and the high demand, especially in the US summer driving season, which ends on the 1st of September. Now, at the same time, OPEC led by Saudi Arabia Plus and Russia have cut production to better match the demand, especially from China, which has yet to meet the expectations post the pandemic recovery. WTI is currently at $80.81 a barrel, whereas Brent crude is at $84.51 a barrel. So that's where the crude is at.
Absolutely, and with that, let's also look at all the important events that you need to be keeping on your radar this morning. And on the corporate action front, you've got NetWeb Tech. The anchor lock-in period is going to end for NetWeb Tech. Remember, this is a new kid on the block and it listed on 27th of July. So the anchor lock-in period is ending today. HCL Tech will be holding its annual general meeting. So the street will be watching out for this stock and what the management has to say about the future, the guidance commentary coming in and along those lines. Followed by that, action in the primary markets, you've got Aeroflex Industries. The IPO will be opening for subscription today. So keep an eye out for all these cues in today's trading session.
And on to some global headlines that made news overnight. Chip manufacturing company and a unit of SoftBank, ARM, has filed papers for NASDAQ listing without releasing details on the size of the offering. Remember, the UK-based company had previously filed for a listing in the US confidentially earlier this year, over the UK, which blew the London Stock Exchange.
And mortgage rates in the US soared to the highest level since November 2000, crushing affordability for potential home buyers. This comes due to rising bond yields driven by investors' concerns that high interest rates and inflation will linger longer than expected. Remember, the 30-year mortgage interest rate, risen to 7.48%, is the highest level since the year 2000.
And US drug maker Teva Pharmaceuticals has agreed to pay $225 million in criminal fines over 5 years to resolve charges related to price fixing 3 medications, including a generic cholesterol drug. Meanwhile, Glenmark Pharmaceutical will pay $30 million to resolve charges alleging that it conspired with Teva to fix prices for the said cholesterol drug.
Staying with pharma then, USFDA has approved Pfizer's vaccine that protects infants from a particular respiratory virus. Remember, Pfizer's RS3 shot is already approved and available in the US for adults. Potentially, the vaccine will also be available to the public by the end of October or the beginning of November, says Pfizer.
And BRICS is all set to hold its 15th summit at Johannesburg from today till the August 24th. Now, hours before PM Modi departs for the summit, all eyes are on the possible meeting between PM Modi and his Chinese counterpart Xi Jinping. And the possible meeting comes amid the India and China standoff and the stalemate at the Indo-Chinese border even after 19 rounds of talks. Let's listen in to what the Foreign Secretary of India, Vinay Kwatra, had to say on the potential meet.
India-China meeting, Yeshe asked and then others asked the same question in different ways. आपने कहा होती है, नहीं होती है. All I would say is that, as I mentioned in my remarks, the host country, South Africa, has invited large number of guest countries, besides, of course, the BRICS members who would be present there. The Prime Minister's schedule in terms of bilateral meetings with those leaders who would be present in South Africa is still being developed, and as and when we have details of confirmation of Honorable Prime Minister's different bilateral meetings, we would definitely apprise our media friends.
All right, and the countdown has begun for Chandrayaan-3 as it is set to be the first space mission to make a landing on the south pole of the moon. The Indian Space Agency said Chandrayaan-3 is set to land on the moon on August 23, which is in a little over 24 hours, around 6:04 p.m. This is a historic moment for India. As we begin the day with the news flow, here's a special report from Times Network on the trials and tribulations of the previous Chandrayaans and how it will impact the third one.
5, 4, 3, 2, 1, 0. Plus 5 seconds. Lift off normal, even
India's space program is hoping to soar higher, riding on the wings of Chandrayaan-3.
8000 LVM-3 M4 rocket.
See, by Chandrayaan 3 success, definitely it will give one big thing for India, a technology for soft landing on a celestial body.
To reach another planet and have a soft landing can be the beginning of a human space exploration at a later stage if you need.
India's first lunar mission in 2008 put Chandrayaan-1 in orbit around the moon and found water molecules in lunar soil. 11 years later, Chandrayaan-2 was only partly successful as the lander crashed, but the orbiter, ISRO said, yielded Discovery-class findings.
Chandrayaan-2, unfortunately, the last part of the landing got into a problem. Otherwise, it would have been very great. That one is all being rectified in Chandrayaan-3. So it is a multiple set of changes which have been done on the Chandrayaan, that payload alone.
For Chandrayaan-3, ISRO scientists went back to the drawing board. They decided to go without an orbiter and cut costs by a third compared to Chandrayaan-2. The separate propulsion module is carrying a payload called SHAPE. While propulsion module will stay in orbit, SHAPE will look for signs of Earth-like habitable planets.
By landing at the near South Pole region where not explored region, unexplored region is landing, and carry out the science there. So the Chandrayaan-3 mission is expected to bring something new scientific findings.
Yet the big takeaway will come from a successful soft landing on the moon. It will put India on top of the league of the select nations capable of landing an object on the moon. The soft landing of the Vikram will affirm ISRO's technical prowess, demonstrate the ability to conduct scientific experiments on the lunar surface, and gain knowledge of the chemical composition on Earth's satellite.
The rover will go around, take very close pictures of the objects there, and more than that, try to map the mineralogy using some of the sensors, and try to look for some seismic vibrations and so on. So it's a very important scientific experiment, as well as demonstration of our technical capability.
The achievement of Chandrayaan-3's objectives, besides bringing laurels to ISRO, could be the force multiplier for India's space industry.
Well, here's hoping that we land on the moon tomorrow, so all eyes will be watching out for Chandrayaan tomorrow. But with that, let's slip into a short break. Don't go anywhere. After the break, we go domestic. Welcome back. You're watching Market Cafe. Let's quickly take account of how the Asian markets have opened up. Well, Asian markets are largely in the green, even as US yields of 10-year Treasury bonds hit the levels not seen in over a decade. Now, the benchmark 10-year Treasury note, as we mentioned at the start of the show, hit a high of 4.34%, reaching its highest level since November 2007, I beg your pardon. And this is very notable because, you know, whenever bond yields inch up higher, they generally mean lower stocks. But we're seeing, a completely different picture right now. We see Japan's Nikkei that's up 170 points, but that is understandable because, Japan's SoftBank Group unit filed for NASDAQ listing that is expected to be the largest over the year. And on the back of that, we do see those gains coming in for Nikkei, but Hang Seng is also up, 0.25% in trade right now. Let's move on to other Asian markets. Kospi up 0.6% in trade. And we also have Shanghai, which is very, very flat, absolutely flat, just up 1 point in trade. ASX 200, however, is in the red, absolutely flat, just down 4 points. So largely in the green. GIFT Nifty has slipped into the red. We started out absolutely flat, was in the red, but has inched lower to down 6 points, which is hinting towards a rather tempered start for the Indian markets as well. So currently, if we look at the global handover and the Asian markets also, they're pretty directionless, and that is hinting towards a rather tempered start for Indian markets as well.
Absolutely hinting towards a tempered start. But before we move on with...
Welcome back. Here watching Market Cafe with me, Ankita Saxena, and with me is Snehi Shah. Let's move on to some news coming on the domestic front then. The Amitabh Kant-led panel has tabled its report on stalled housing projects. Among other reforms, the panel has suggested that all projects should be mandatorily registered with RERA and immediate registration or execution of sublease in favor of home buyers. Prakash Priyadarshi is here with more details.
The Amitabh Kant-led committee has submitted its final report to the government on stalled housing projects. The committee has identified 7 major areas where action has to be taken to resolve these housing projects. Committee has made several recommendations when it comes to possession, occupancy, subleasing and registration. Committee has made recommendation to have mandatory registration of all housing projects with RERA. Apart from that, committee has also recommended government to provide registration with immediate effect in favor of home buyers. When it comes to pending dues, committee has said that immediate action should be taken to recover dues from builder. But in a case where dues is pending against home buyers, in that case, RERA should collect payments, not the builder. Occupancy and possession of all completed projects should be given within 30 days. The second important aspect of this project is related to financial support for these stalled housing projects. Committee has recommended all state governments to announce financial package to complete these projects on time. Developers will have to complete these projects within 3 years if they are opting financial package scheme. But in a case a builder is not opting financial package scheme, in that case RERA-led framework should be adopted to complete these projects on time. Apart from that, government should classify stalled housing projects under priority sector lending. Similar to MSME sector, subsidized interest rates or guarantee scheme should be adopted to complete these housing projects. In order to support home buyers stuck in these stalled housing projects, committee has recommended RBI to classify additional funds as standard assets. But last but not the least, committee has recommended to adopt IBC route as a last option to complete these housing projects.
All right, thanks Prakash for all those details, and let's move on then, because the government will notify e-commerce policy by the end of this month. Now, ET now has learned from sources that after over 70 meetings and consultations with stakeholders, the proposed policy is in the final stages and may be announced soon. Let's go across to my colleague Sumita Karir, who has more updates on this.
The proposed national e-commerce policy is being formulated by the Commerce Ministry, is in the final stages and is expected to be rolled out by the end of this month, according to sources. Sources have also told ET now that this could be rolled out through an executive order. Ministry of Commerce and Consumer Affairs are empowered to create guiding principles. In fact, the rules will be framed under the Consumer Protection Act, while the e-commerce policy will come under DPIIT. A detailed discussion has happened over this policy with Commerce Minister Piyush Goyal along with secretaries of TPIIT and Commerce. In fact, that meeting was held on the 2nd of this month, and key brands like Reliance, ShopClues, Tata Click, Amazon, Flipkart and Meesho were in attendance as well, and a broad level of consensus was achieved. It emerged amongst them on key 5 to 6 principles of the proposed policy, such as data localization or collection, processing of data and review of current practices. Remember, the upcoming policy will establish a framework for providing a conducive environment for the growth of e-commerce as a sector through regulatory streamlined framework. And sources have also told us that some of the aspects of the new policy could include introducing a fallback liability, which establishes more responsibility on the marketplace instead of just putting it on sellers in case of faulty products. Number 2, e-commerce entities will have to make mandatory registrations to know how many total number of e-commerce companies exist in the country. Data localization norms will be there to maintain data security of users, and in fact every marketplace will have to create a grievance cell for users, and they will also have to ensure a level playing field for all players, big or small, so that predatory pricing could be stopped, deep discounting as well. In fact, also it will stop them from owning inventory. Remember, 2 earlier drafts of the policy have come out, and they have spoken about 6 broad areas of the e-commerce ecosystem, including data infrastructure development, marketplaces, regulatory issues, export promotion through e-commerce, and overall 70 meetings and consultations, according to sources, have already happened with industry stakeholders as far as the e-commerce policy is concerned.
All right, moving on then. As the prices of onions have soared in the domestic market, the centre has stepped in and taken steps to ensure enough supply in the market. Let's quickly go across to my colleague Samir for further details on this.
In a move to curb the prices of onion, the government has intervened and has announced that the government will be selling onion at a subsidized rate of ₹25 per kg. The government agencies, NCCF and NAFED, the mobile vans has been stationed across the Delhi NCR. 10 such mobile stations have been placed in Delhi NCR where the onion and tomatoes are being sold. When we specifically talk about onion, that it is being sold at a price of ₹25 per kg. It's a subsidized rate. And the reason is that government anticipates that because of some traders, those who are indulged in holding practices, they might push to escalate the prices of onion in coming days. Secondly, the tomato prices, as of now, the prices have softened a lot. Tomatoes, which were being once sold at around ₹200 per kg, and now it has been brought down to ₹70 to 80 per kg. But when it comes to the onion, government understands that there are some hoarding practices which is going on. Secondly, the weather conditions are also not favoring. The supply might be disrupted. The total quantum that usually comes in market, that might be reduced this time. And this may further escalate the prices of onion in the domestic market. So the government has intervened and has placed these sort of mobile vans across Delhi. Government will be selling the onions at a subsidized rate for next maybe a couple of weeks, around 10 to 15 days, and will then understand that if they has to increase the points or the mobile vans, or how the situation react. So these sort of steps the government has taken, and as of now the buffer limit stock has also been increased from 3 LMT, 3 lakh metric ton to 5 lakh metric ton. Government says that the inflation will be in control, and they will be taking all the steps to ease out the situation to help the consumers.
Absolutely, Sameer. Thanks for all those details. We will keep an eye out on where the onion prices are headed from here on. But it's the big exclusive right from the headquarters of the two-wheeler major. Bajaj Auto's ED, Rakesh Sharma, shares the company's growth roadmap. Also says there is a big opportunity emerging in EVs and the recent tie-ups with Triumph. Listen in to what he had to say.
Do you see the EV portfolio, whether it is e-rickshaw or e-two-wheelers, can they add more than 10% to your total kitty next 2 to 3 years?
Well, that's a function of the
numerator
and denominator. Yeah. But certainly, I think with the kind of political support which is there in India and many other countries, with the kind of switch which has happened in the mind of the customer about the viability of the electric option or the appeal of the electric option. And if the ecosystem of batteries and cells moves, the commercials move in the downward direction, and if all these things happen, certainly the electric transition to electric will continue, and definitely more than 10% odd would certainly, it's in the realms of possibility.
And would you say the new JVs which you're forming up, whether it is with Triumph or whether it is with KTM, they could add another 10-15% in 2 to 3 years?
Well, KTM is a success story, as you know, because that kind of that partnership started in 2007 and has gone again to many, many countries, many different kind of product formats, etc. And Triumph is a non-equity partnership, but a very strategic partnership, and has just commenced. The whole idea is to expand that franchise, and as its opportunity will probably be bigger in the medium term than the KTM opportunity. But as the next few months unfold, we will get a better fix of the numbers and what kind of an impact it would have. But directionally, we feel that it'll be bigger than KTM. KTM is still going very strong. It'll continue to hopefully prosper in due course of time. Triumph should exceed that. But as a percentage, let's see where the ball stops.
Well, do watch out for that exclusive with Bajaj Auto. And moving on to the cement sector then, sources suggest that Ultratech is mulling to merge the 3 subsidiaries with itself. My colleague Ankur Mishra is here with all the details.
Yes, Ultratech Cement is going to hold a meeting with its secured creditors. Now, this meeting is being called for approving the merger with its subsidiaries. Remember, the company had announced that it is going to merge its subsidiaries, that is Nathdwara Cement, Swiss Merchandise, as well as Merit Plaza with itself. In fact, Merit Plaza as well as Swiss Merchandise is a part of Nathdwara Cements, and they had been acquired as insolvency process, and for the simplification of the process and better streamlining and use of synergies, this merger is proposed, and for that now the approval of creditors has been sought. The company had moved NCLT for the merger, and NCLT had directed that a meeting with the creditors needs to be called, and hence this meeting is going to be held on September 4th. The lender's approval is needed for the merger, and they will be voting by the creditors. Now, these creditors also includes bondholders, and and it is required to obtain the certain criteria for the approval of the merger. After this, the company will once again move to NCLT after the result of the voting, and similarly the other regulatory approvals are also needed for the merger, and SEBI has also notified this meeting by the Ultratech Cement. Now we need to wait and see that what actually happens on September 6, where the actually result of the voting will be updated to the shareholders.
Alright, and with that, we'll slip into a very short break, but don't go anywhere. On the other side, we'll see all the stocks that you should be keeping on your radar this morning.
Welcome back. You're watching Market Cafe, and it is that time of the show where we get you all the stock-specific news and all the stocks that will move the markets. And for that, we have Ansh in the studio. Hello, good morning, Ansh. Tell us what are the stocks that are on your radars that are likely to be buzzing in the trade today.
Sure, good morning. So Union Bank will be the first stock in focus for today's trading session, as bank has approved raising of fund for an amount not exceeding 5,000 crore by issuing equity shares through QIP. Apart from this, Brigade Enterprises will also be in focus, as company has entered into a sale deed for acquiring 6.5 acre of land parcel located in Chennai. A residential project will be constructed on this land parcel. RITES and NHPC has signed an MOU for rail infra consultancy work. Tata Power Renewable Energy and Tata Motors are teaming up to build a solar power plant in Uttarakhand. This solar plant will also help to reduce the carbon emissions. Lemon Tree Hotel has signed 2 new properties in Bhubaneswar and Kasauli. Welspun Enterprises will also be in focus, as company has completed the acquisition of around 50.1% stake in Michigan Engineers, which has now become a subsidiary of the company as well. Lastly, BLS International will be in focus, as company has informed exchanges that its subsidiary BLS International FZE is in process to subscribe 100% stake in BLS International Travel and Tourism.
Thanks a lot for taking us through all those stocks. I'm sure we will be keeping an eye on all those stocks in today's trading session. But another stock that will be in focus today is Aurobindo Pharma, because the brokerage firm Citi is bearish on that stock. Now it has downgraded Auro Pharma to sell and believes that the improved market conditions in the US generic may not sustain. My colleague Vamakshi is joining in with more details. Good morning, Vamakshi. Tell us why the stock is going to be in focus today.
Well, yes, Aurobindo Pharma is expected to be in focus today on the back of the brokerage note from Citi. Largely, Citi has highlighted that after the recent rally that they saw, Aurobindo's valuation is now above the 5-year as well as 10-year mean. In fact, the valuation is factoring in the near to medium-term earning levers, such as the launch of Revlimid, commercialization of Pen-G under the PLI scheme, any potential improvement in the injectables business. On the other hand, there were improved market conditions in the US generic space, but they do not expect such improved conditions to sustain ahead. In fact, as far as the generic pipeline is concerned, they have very limited visibility, and they have highlighted that the company's generic pipeline is not providing comfort for growth on the high base of the US sales. Now, on the other hand, they're also highlighting that the biosimilar upside is still some time away. So all in all, when we look at the note from the Citi, largely they've highlighted that all the near-term levers are already priced in as far as the valuations are concerned, and given all these factors, Citi has gone ahead and downgraded its rating on Aurobindo Pharma from buy to sell, and in fact they've nevertheless hiked their target price to 750 rupees per share.
And well, moving on then, thank you so much for that, Vamakshi. We'll move on to another brokerage note that's coming in. Vamakshi, do tell us what the note says.
Yes, let me first start off with car trade, and we have a brokerage note coming in from Nomura, and they have highlighted that the company has completed the acquisition of OLX India's classifieds as well as auto business. They plan to continue to operate the acquired businesses under the OLX brand. They see limited cannibalization of existing car trade businesses as well. Now, the key focus areas for the company will be customer acquisition, marketing costs by leveraging the car trade as well as SAMIL network, and the company is also expecting to be that the entity will be profitable by FY25 and will not be as margin dilutive. So all in all, Nomura has maintained a buy rating on car trade with a target price of 678 rupees per share. And lastly, watch out for Jio Financial Services. Macquarie has come out with a report, and they believe that if Jio Financial Services can leverage nearly 4 times in the medium term. They can post an AUM of almost 80,000 crores in the next 4 to 5 years. Now, to just give you context, an AUM of 80,000 crores is roughly 30% of the AUM of Bajaj Finance. When we look at Jio Financial Services, it currently employs nearly 29 people, and in fact, they are building an army of collection agents. The CTO, CDO, as well as the CRO are yet to be hired, and all in all, Macquarie believes that it is unlikely to be secured in secured segments initially, and the impacts on the banks as a result will be quite limited. So on the back of these brokerage notes, watch out for car trade as well as Jio Financial Services.
Alright, Vamakshi, thanks for taking us through notes. We will be keeping an eye out on both those stocks in today's trading session. But another stock that is going to be in focus today on the back of brokerage notes is HDFC Bank, because the stock has seen not one but two brokerage notes coming in this morning. Harsh, I believe Macquarie as well as UBS have come out with notes on this stock. So tell us what these notes are saying.
Well, yes, in fact, the HDFC Bank management met with several analysts as well as investors in Singapore. And essentially what Macquarie has done is they've in fact upgraded HDFC Bank in terms of target price. And what they're suggesting is, and they've titled their note very interestingly, saying that the elephant will dance and that you just have to be patient as investors. What Macquarie seems to be suggesting is HDFC Bank is confident of doubling its balance sheet in the next 4 to 5 years, and Macquarie believes that they're going to be able to do that. They believe that there are several levers with regard to ROAs getting better. One is, of course, your NIMs, which will compress from that 4.3% on interest earning assets to 3.9% as a result of the merger, will also have scope for expansion going forward given unsecured. And what they also believe, secondly, is that OPEX ratios will start to come off. You're currently seeing your cost to income at around 43%. They're suggesting that HDFC Bank expects that to be at 40% pretty much immediately, and will start to taper as branches start getting more and more profitable. But HDFC Bank's management seemed quite positive on the back of that, on the back of rather the meeting with Macquarie, and Macquarie believes that, or they've given a thumbs up to that management guidance that HDFC Bank seems to have given them. What they're also suggesting, interestingly, is the fact that they've maintained their buy rating, and the target price that they've given is 2110 per share. But they're suggesting that the bank may take some time to correct, maybe post FY24. So one will have to wait and watch as to how that plays out. UBS also positive on HDFC Bank, given a target price of $1,900 a share. They believe that there are three opportunities, three challenges. The challenges being deposit growth as well as loan growth and ROA differential getting compressed, and the opportunities being relative NII trends, operating leverage playout, and the ROA uptrend. So largely, both brokerage notes positive on HDFC Bank.
All right, Harsh, thank you so much for joining us for that. But moving on, a lot of action happening in the primary market, at least in the month of August. We have seen a couple of listings, and another kid on the block is Aeroflex Industries that will be opening up for subscription as of today. Let's look at what the company is all about. Now, the company was incorporated in 1993. It manufactures and supplies environment-friendly metallic flexible flow solution products. Now, the products include hoses, exhaust connectors, expansion bellows and compensators, and so on. The product portfolio includes 1,700 product SKUs, and the clients include distributors, fabricators, MROs, OEMs, and companies that are operating in a wide range of industries. Now, the IPO dates are, of course, it's opening up for subscription today, and it will go on till the 24th of August. They have a price band of 102 to 108 rupees per share with a face value of 2 rupees per share. The fresh issue is for 162 crores and the total issue size is for 351 crores, and the offer for sale is for 189 crores. Now, post the IPO, the market cap is likely to be somewhere around 1,396 crores or thereabouts, and post the listing, the shareholding of the promoters will be reduced to 66.9%. Also, they have already raised 103 crores from anchor investors like Associate General, Nippon Mutual Fund, Invesco Mutual Fund, White Oak Mutual Fund, these are among the key marquee investors. And if you look at the objectives of the IPO, well, it is basically to repay their debt and for funding the working capital requirements of the company and the general corporate purposes. Now, quickly, let's look at the financials. The revenues have seen a good uptick by FY23. It stood at 269 crores versus 145 crores in FY21, and the margins have been hovering between 15 to 20%. Also, let's look at the pairs. Post the listing, they will find competition in Parker Hankiff Corporation and Senior PLC. Aeroflex Industries is estimated to be at a PE valuation of 40.91 as compared to Parker, which is trading at a PE multiple of 26.18, and Senior PLC, which is trading at a PE multiple of 35.35. So that's what the roundup of Aeroflex, which will be opening up for subscription. So it's going to be a wait and watch of how this stock will make its debut on the D Street.
Absolutely a wait and watch for this new kid in the primary market. But with that, let's move on. And Vikas Khemani, founder of Carnelian Capital Advisors LLP, believes that the current consolidation in the markets is a good thing, which will make place for future rallies. Let's listen in to his views on foreign flows, earnings outlook, as well as portfolio construction.
We had a very sharp rally in the recent past, so post SVB crisis. So in this kind of market, it's very natural for a consolidation to happen, and that's what is going through. And also we have a lot of sort of concerns coming up on the horizon in terms of inflationary pressure, especially the developed markets. So these are the very natural process of consolidation in the market. Markets never go one way, but so I feel that this nice consolidation phase is good and making a nice base for further future rallies in times to come.
What could be the trigger from, let's say, from here till December, or let's say till budget? Because most of the triggers in terms of liquidity, earnings, valuation mismatch, they've been played out.
I think, Nikunj, we always underestimate that. I think same thing if you see 6 months ago, I don't think anybody expected this kind of liquidity, coming in, and it did come in. So I think what we have seen is a very small amount of liquidity hitting. India, is significantly underrepresented in the global portfolio, while our clout, our GDP, our growth is far more better placed than any other markets around. So I think as you see this bridging of the gap of India getting represented well in most global portfolios, you will see more and more flow coming. So I am fully convinced that India will see disproportionately large flow in times to come. We lost in last 2 years close to $40 billion as the interest rates were rising in US and emerging markets, so outflow. But I think that is all set to reverse. We will see much more than $40 billion coming through in the next couple of years as the interest rates environment settle down. So liquidity could be very big reason. And I think earnings part also, in my opinion, is reasonably stable as far as the Indian corporation is concerned. The banking, IT, manufacturing, infrastructure is going well. So across the board, we have a reasonably good, well-diversified earnings growth profile. So I'm not overly worried about, and so if you have both earnings as well as the liquidity in place, I see no reason why one should be very worried from a medium term to long term perspective. Short term, anything can happen. Markets can correct for any reason. Many developments can happen.
I'm just going through your latest note, and it talks about the Carnelian shift strategy. You've talked about as to how tech evolution is empowered by digitization globally. We wanted to understand what you make of whether Indian IT can catch up to that or not. Because clearly the AI capabilities are yet to be proven, and the health of their balance sheet don't seem all that great, or rather, question on long-term visibility or near-term visibility on, how strong the earnings and margins are going to be.
No, I think we've been very positive on IT as a sector. We've spoken many times over this, and I am not really worried about. In fact, every change of this cycle or every new trend, it has only benefited Indian IT sector. Go back to your memory that when Y2K happened, that was a big trend, but post Y2K, many people wrote off sector. But next 10 years was about, ERP implementation and all those things. And when ERP was kind of done, growth was slowing down. Then again, people were worried about the IT sector. Then you saw third wave, which was coming in form of digitization, cloud migration. So I think and I think we are probably in the fourth wave where the new set of technology will drive. So you solve bigger problems, different problems, but you need technology backend, and which is what I think Indian IT services does. So I am I'm not worried about it. I think most Indian IT companies are so gearing up building AI capabilities, and we specifically focus on investing into companies which can grow higher or faster than the overall industry growth. There are segments, whether it is ER&D, aviation focused, or SaaS kind of companies or product focused company, which will grow far more faster. And we are seeing in India good set of companies coming through that. So you can play based on what you like, and we've been trying to play through some of those narrow themes within the IT theme.
I wanted to get in your thoughts on auto and auto ancillary as well, because now it seems that all of those issues with respect to the high input costs and even supply chain distribution problems, the landscape is changing quite drastically. We've seen the stellar performance as well of these stocks. What do you think are going to be some of the key factors that will drive growth, in particular even when it comes to EV?
So I think auto in general will continue to do well, because we have seen sector delivering growth after almost 5-6 years of winter. So I think this growth is likely to continue. Improved infrastructure, improved GDP growth, improved earning profile will lead to this demand. And of course, within that, EV is fastest growing sector, and companies like Tata Motors and all are well placed. They're the largest player in Indian EV space. So I think many companies will benefit that, and even auto component companies exposed to that kind of segment, which is less prone to disruption on the ICE side. So we prefer those kind of players, and in my opinion, all of them will do well. So auto as a sector, we are quite positive.
Latest note, Vikas, you've talked about, carb companies, right? Quality companies at a reasonable price, which one should be looking at adding in your portfolios, and you have in your funds as well. Where is it that you're finding value in this market?
So I think, again, value is a very misunderstood subject. Value doesn't mean it's cheap. It's about whether are you getting good companies at a reasonable price. And that is what our focus has been right from the beginning. And we will never buy something just because it is cheap. At times, cheapness or value can be a trap, right? So I think, there are segments where, and I'm again telling you with a lot of responsibility that at one level, I feel India is such a diverse market that one is spoiled for choice. There are a lot of choices to invest. We constantly struggle to kind of narrow down our portfolio because our mandate is between 20 to 25 stocks. So, every time you get a new idea, how do you fit into a portfolio? So I really don't believe that, there are investable ideas available, which are very promising, which can kind of be compounded from medium term to long term perspective, and not a...
Alright, we are completely out of time on this edition of Market Cafe. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. The market will take the action forward.